Welcome back to the Deep Dive. Today we're jumping straight into the DappRadar State of the Dapp Industry Report for Q2 2025. Our mission: to pull out the key insights, the surprising bits, and the big shifts so you get the important stuff fast. We'll hit some interesting contradictions like growth versus funding and this whole evolution in digital ownership. Okay, let's unpack this.
Yeah, and the DappRadar report, it's more than just numbers. It's really a crucial pulse check for Web3. We're going beyond the surface to look at why these trends matter. And Q2, it was definitely a mix, big growth, but also some real challenges.
Right, so let's start with the big picture. Daily active wallets, dUAWs, averaging 24.3 million. Now, it dipped slightly, like at 2.5% from Q1, but, and this is the key part, it surged 147% compared to last year. That's massive long-term growth, isn't it? Despite maybe a bit of a quarterly cool down.
Absolutely. That 247% is proof of broader adoption. It shows real staying power. And we're seeing shifts within that activity, too. DeFi and gaming dipped a bit, but AI and social dApps, they're really picking up steam. And AI dApp even hit the top spot for users this quarter.
An AI dApp at number one. Wow. What does that signal?
Well, it suggests users are looking for maybe different kinds of utility now, practical stuff. Things like, decentralized AI, potentially offering better privacy or data control. But the report also mentions fragmentation, especially in AI and gaming, dormant dApps. It makes you wonder if we're seeing early signs of, market consolidation. Only the strong survive, maybe.
Interesting. Okay, let's pivot to DeFi, because here's where it gets really interesting, like you said. The good news. Total Value Locked, TVL, hit $200 billion. That's up 28%. Ethereum bounced back strong, up 36%, and it's still the giant, holding 62% of the market. Seems great on the surface.
Exactly. That's the surface. But then you look at funding. DeFi funding actually plummeted 50% in Q2, only $483 million raised. So more value locked in, but way less new investment coming in. It's quite the contradiction.
Yeah, that is odd. What's going on there? Investor fatigue? Or maybe a shift in focus?
It raises an important question, doesn't it? Is it maturity? Maybe investors are backing proven winners now, not just any new project, or are they just waiting, holding back? It definitely suggests a potential shift for DeFi. Maybe less about hype, more about sustainable value.
Okay, let's talk NFTs and RWAs, real-world assets. Another area with some twists. NFT trading volume dropped 45%, but the actual number of sales jumped 78%. So fewer big-ticket sales, but more people buying cheaper items. Is that it?
Pretty much. It looks like broader participation, but at lower price points. The speculative frenzy has cooled. But the really big story here, I think, is a shift from flex to function. Look at gaming NFTs. Guild of Guardians actually overtook BAYC and CryptoPunks in trading volume. That's huge.
Wow, a game's NFTs beating the classic collectible.
Yeah. It shows utility is becoming key. These aren't just profile pictures. They're usable in-game assets. And then you add the RWA surge, tokenizing real things like watches, sneakers. Courtyard became the #2 RWA marketplace. It's all pushing NFTs towards real-world use and function, not just collecting. That's crucial for adoption,
Makes sense. Utility drives adoption. But then there's the less positive side, security. The report's numbers here are pretty stark. $6.3 billion lost to hacks in Q2. That's a 215% increase from Q1. Ouch.
Yeah, it's a staggering number.
Yeah.
Now, we have to say one massive exploit mantra accounted for $5.5 billion of that. So that skews it massively. It was the second biggest loss since FTX.
Still, even removing that one event, security feels like Web3's persistent weak spot, right?
Absolutely. It raises that important question again. The takeaway is clear. Security is still a massive critical challenge. The message for builders has to be build safer. These kinds of losses just erode trust, which the space really can't afford. We need to do better fundamentally, especially if we want mainstream users to feel safe.
Definitely. So wrapping up this deep dive on the DappRadar report, what's the final picture? User engagement seems strong, but the focus is shifting, right? Towards AI, gaming, utility, RWAs. The industry is growing, evolving, but that security cloud still hangs over everything.
Exactly. Growth and evolution are happening, but the risks are still very real. And that leads to a final thought for you, our listener, to chew on. We see NFTs moving from flex to function, RWAs integrating real value, but security is lagging. So how will this pressure bringing real-world value on-chain force innovation in security and maybe even regulation? What does that mean for getting the average person comfortable enough to really jump into Web3? Something to think about.
A great question to end on. Thanks for joining us for this deep dive. Hopefully you feel a bit more clued into the state of the Dapp industry.